Good evening, everyone, and welcome to tonight's Strategy of the Week presentation titled Colt 45 Automated. Tonight, I'll be announcing our second winner of our Cherry Picking Challenge contest. Tonight's winner is Mr. Russ Wade. And what Mr. Wade did was he took Kevin Moore's methodology from our Strategy of the Week presentation on March 28th and created custom moving averages on the indicators that Kevin used in his cherry picking technique and built a search using those custom fields. For those of you who may have forgotten Mr. Moore's technique, let me refresh your memory. Kevin was our first winner, and by the way, there is no first or second or third place winners here. If we like your submission and use it in a Strategy of the Week, we will send you a check for $1,000. So congratulations to Mr. Wade, your check is in the mail. Kevin's cherry picking methodology was as follows. What we're looking at here is our Midas Touch timing model, which was initially designed to time the long-term trends of our gold bugs index. If your graph layout doesn't look like this, you can just simply click on Graph Layouts here and select the Midas Touch layout. It uses a 10-day and a 65-day moving average on the Huey stop price and also a 40-day moving average on the RT of the Huey. Well, Mr. Moore employed the same layout that you see here, but instead of using the Huey, he used it on individual stocks. And it really does an excellent job of keeping you on the right side of the longer term trends. He even supplied us with a little picture of the type of patterns he was looking for with this layout. And let me show you that picture. Colt is an acronym that stands for Character of Line Trends, and the 45 reminds us of the idealized 45-degree slope of the three moving average lines. So ideally, we'd have all three moving average lines moving from the bottom left to the upper right in a nice 45-degree angle. While that is very difficult to find, that's the ideal situation, and that's what we want to look for. And to confirm that the stock chart has met this test, he incorporates 5 rules. First, the market must be in a confirmed up situation, and this seems to work very well in conjunction with the slower timing indicators used in the graph layout. Second, the 10-day stop price moving average must be above the 65-day stop price moving average. But more specific than that, both stop price moving averages must be hitting new 3-month highs. The fourth rule was that the 40-day RT moving average must be above 1, and finally, the 40-day RT moving average must be hitting a new 3-month high. And if you recall from Todd Schaefer's demonstration of this methodology, while cherry picking through the top 100 stocks from the S&P 500 stop ascending search, Todd only found 4 candidates that met all of these rules. For some, that may be a limited number of stocks to work with, so Mr. Wade put a slight spin on this approach, and let me show you what he came up with. Here we are in Unisearch, and I'm going to open up our cherry picking folder in our search directory and select the new search name, which will be in your VectorVest 7 platform tonight. It's titled Colt 45 Automated. And if I select that search, you can see the list of parameters. So Mr. Wade also used the default S&P 500 stop ascending search as his base parameters. You can see the sort is stop ascending, the stock watch list equal to the S&P 500, and the default parameters that accompany that search. And the following parameters are what Mr. Wade added to that search. He wanted the 10-day moving average on the stop price to be greater than the 65-day. He wanted the 10-day moving average on the stop price to be greater than 13 weeks ago or 3 months ago 10-day moving average on the stop price. He also wanted the 65-day moving average on the stop price to also be greater than 3 months ago 65-day moving average on the stop. The 40-day moving average on RT to be greater than 1, and the 40-day moving average on RT to also be greater than 3 months ago 40-day moving average on RT. So instead of needing all 3 moving averages at 3-month highs, he simply wanted all 3 to be higher than they were 3 months ago. And what this does is it gives us a much bigger pond to fish in. I'm going to change the date here to the confirmed up signal on December 18th of 2012, and I'm going to run that search. We are displaying the top 100 stocks. So what you can do from here is you can now go through the graphs and cherry pick the stocks that meet the original set of rules set by Mr. Moore. Let me show you. I'm going to close our search directory down, give us a little bit more real estate, and I'm going to graph the top 30 stocks. I don't need to graph all of them, and I'll show you why. I'll graph the top 30. Our graph layout is already set to the Midas Touch layout. You can see we have a 10-day and a 65-day on the stop price of the stocks and a 40-day moving average on the RT. And one thing that you may forget to do is change this graph to a 3-month graph and take it back to our search date, which was December 18th of 2012. So come down to the bottom left, select 3 months. I'll move our slider bar back to December 18th of 2012. So we're looking at 3 months prior to December 18th of 2012. And let's just focus for now on the bottom indicator, the 40-day moving average on RT. Remember, the 40-day moving average on RT has to be hitting a 3-month high. Clearly, it's not doing that with this stock, GWN. It is higher than it was 3 months ago, but you can see it's not hitting a 3-month high. So we'll move on to the next stock. Here we have LUV. So our second stock already meets all 3 criteria. The 40-day moving average on RT is above 1, and it's hitting a new 3-month high. The 10-day moving average on the stop and the 65-day moving average on the stop are also higher than they were 3 months ago and hitting new 3-month highs. So LUV would be our first candidate. You may want to write that down. I'll move to the next stock. We have Bank of America. The 10-day and the 65-day are both at 3-month highs, but the 40-day moving average of the RT is not. I'll move on to the next one. Here we have Ford. All 3 criteria are met. 10 and the 65-day are at 3-month highs, as well as the 40-day moving average on RT. So we've been through a few stocks here. We already have our second candidate. I'll move on to the next one. I'm just going to scroll through these until we see another stock. Here we have Yahoo. Both moving averages here at the top of the graph are at 3-month highs, along with the 40-day moving average on RT. So that's another stock that meet the rules. I'll move on to the next one. Here's another one, HRB. So write that down as well. This one was close. I'm going to create a crosshair cursor, and you can see that we are slightly off of the recent high. The 40-day moving average on RT currently, or on December 18th, was at 1.38. Just a few days earlier, it was at 1.39, so it doesn't quite meet the criteria. This one's slightly off its recent high as well. Let's see, KR, slightly off at 1.16. Just recently it hit a high of 1.17, so this one's slightly off as well. Here we have XYL. RT is at a 3-month high, along with both moving averages at the top of the graph. So this is another candidate. You can write that one down as well. Here we have CAG. RT is at 1.19, and it is at a 3-month high, along with both indicators at the top of the graph. TXN is not quite at a 3-month high, but again, it is higher than it was 3 months ago. Here we have HRL, also meets all 3 criteria. SYY, it does as well. We could see that the RT here was at 1.06, matching a 3-month high, so we can count this one as well. BMS is slightly off. AVY definitely meets all 3 criteria. And finally, FIS, if I come up here, the 65-day moving average is at 31.15. We could see that it is at a 3-month high as well. So we really only had to look at the top 30 stocks to find 10 candidates that meet all the rules that Mr. Moore initially set for us with his initial cherry picking methodology. So now that we've identified 10 stocks that meet all of the original rules, let's quick test them to see how they've performed. I'm going to close out of this graph. And what I'll have to do is manually select those 10 stocks. So the first one was LUV. I'm going to continue to scroll through this list and hold my Control key on the keyboard down and click on each of the stocks that meet the criteria. Yahoo, HRB, YXL, CAG, HRL, SYY, AVY, and FIS. So now that I've selected those 10 stocks, let's quick test them to see how well they've performed from that confirmed up call on December 18th to the subsequent confirmed down call. I'll have to change the top date here, or our end date, to April 15th of 2013. Run the test. So we can see we have 10 winners and no losers. The average gain was 17.8% with an annualized rate of return of just a little over 55%. And we could see that we well outperformed the VectorVest composite, the VVC, over this time period, up just about 5%. So you may be thinking, well, that's great, but how about simply taking the top 10 stocks and being okay with the fact that the moving averages are all higher now than they were 3 months ago, and not so concerned with them being at 3-month highs? So let's take a look. I'll close out of the quick test window. I'll scroll us back up to the top, and I'll simply quick test the top 10 stocks over that same time period. Well, once again, we have 10 winners and no losers. A little bit better performance here than from cherry picking 10 stocks out of the top 30. We could see we're up 20.26%, a little bit higher annualized rate of return. But what I want you to focus on is the number of winners that we have out of the top 10 stocks. We have 10 winners and no losers. Let me close out of the quick test window, and instead of taking the top 10, I'm going to take the top 20 stocks. Wow, an average gain of 15.5% with 19 winners and 1 loser. Well, how about the top 30 stocks? 28 winners, 2 losers, same gain, 14.7%. How about the top 40 stocks? And this will be the last quick test that I run during this time period. 35 winners and 5 losers. And I ran these multiple quick tests just to illustrate the robustness of this search. And we're going to leave this up to you. You can simply take the top 10 or the top 15 or the top 5 stocks and invest in those. Or if you want it to be a little bit more selective and cherry pick through the list here and make sure that all of those 3 moving averages are at 3-month highs, you may do that as well. We're going to leave that up to you though. But we think that this is a fantastic search as is, without having to cherry pick through the list. And not only do these quick tests prove that, but let me show you a back test that I performed using market timing and money management going back a little bit further. I went back to the beginning of January of 2012. So here you can see the run here from January 3rd to the close of yesterday. I used the confirmed calls. I managed a 5-stock portfolio. I used a 50% gain or a 10% loss to exit positions. This portfolio went up 57.39%, about a 42% annualized rate of return with a very minimal drawdown of less than 8%. But the key indicator here, or the key column, is the percentage of winners. 82.61% winning trades. And that's really the thing that I love the most about this methodology, is that it finds winner after winner. And what we've done is we've attached a PDF form of the backtest rules in tonight's VectorVest view. So if you want to take a look at the rules and recreate this yourself, you may do that. But that PDF lays out a nice trading plan that you can follow if you're interested in this type of a methodology. So this concludes tonight's strategy of the week. And again, I want to congratulate Mr. Kevin Moore and Mr. Russ Wade for creating such a dynamic stock selection methodology. Have a great weekend, everyone.